Welcome back to the channel. You're obviously here because you want to make sure that you make the best decision and not lose any money when it comes to investing in real estate in Dubai. Now, this is an exciting topic because I know of investors who have followed this strategy and made a lot of money. I also unfortunately have a very long list of transactions that I can show you where people have lost a lot of money in new construction because they were promised a 50% appreciation before handover, the best luxury, best appreciating, best building, the new Dubai. They were promised big things, and when it came to delivery, just because the correct due diligence weren't done, just because they didn't follow the evidence of real estate investment success, but rather followed their gut and emotions, they lost a lot of money. So the purpose of this video is to make sure that I equip you with the information and tools so that you can do your own due diligence. And if you want me to run through due diligence for you on a project that you might be interested in, I've got a link to my calendar in the description. Book a time in my calendar. We've got about 30 minutes. We can run through all the pre-prepared questions that you have to make sure that what you're going to get involved in has a proven track record of real estate investment success. Now, buying real estate direct from a developer with the promise of tremendous appreciation is a very popular way to go about and a very profitable way to go about investing in real estate. But as I just mentioned, it can go terribly wrong. So how can you make sure that it doesn't go wrong for you? You're investing in a new construction for a very obvious reason that by the time this project hands over in 2027, 2026, whatever the completion date is, it's going to be a brand new building that is aligned with all the other new buildings in that said community. And there's always a bigger demand for new shiny things. You always have a better return on investment in terms of rental yields when it comes to the new buildings in any community. You're also buying at a wholesale price, which is the best price that building would ever sell at any given point in time. It should at least be that way if you've chosen the right developer, the right unit, the right location, and that you've done the right due diligence. And I'm going to give you all of that in a second. When you purchase with certain developers, it's very important to look at the past transactions of completed projects to see if those investors have made appreciation and if the rental yields are as good as you are being promised at this point. And how do you see that? How do you figure that out? Well, thanks to DXB Interact, they have linked their software with the back end of the Dubai Land Department, where you can type in the building, the unit number, and see very transparently what the purchase price was on the day of launch when this investor bought from this developer, and how many times that property has transacted and what the actual appreciation was. So this is a really good way to see the next building by X developer and the promise they have for appreciation. Where do they come up with this appreciation and rental yield projections? It's easy for you to not just take their word, but go on to dxbinteract.com and look at their past transactions, look at their past buildings, and make a conclusion for yourself. And you will probably see, investing with this developer, they take care of your investment appreciation. If you're investing with the right developer, they will never launch the next project in the same location at the same or lower prices than the previous launch. That way, they make sure that their previous investors and their future investors remain protected in terms of entry price to their projects, price per square foot. Wouldn't it be great to know that the developer that you're partnering up with essentially is going to take care of the majority of your appreciation? So when you're purchasing directly from developer, you go into a payment plan schedule that will show you exactly what your financial obligations are to pay towards this property. So payment plans look something like it's either a 50-50 or a 60-40 or a 80-20. The 50-50, 60-40, 70-30 is very advantageous for any investor. The first 50% is half of the value of the principal amount that needs to be paid during the construction period. And to start off with those payments, you would be required to pay a 10% down payment plus a 4% DLD payment. Now, the 4% isn't deducted from the principal value, the initial purchase value of this property. That is an additional fee to the Dubai Land Department. But you've got a 50-50 payment plan. And then every quarter after that, until handover, you are required to pay, for example, a 5% or a 7% of the principal value until the day that the construction is completed and this building has a handover certificate. Now you still have a 50% balance. Now you can decide what you want to do with that balance. Do you have the cash to pay that balance and complete the property purchase, or are you going to finance that 50%? Now, the benefit of a 50-50 is that you can finance 50% of the value of that property, which helps a lot if you are going to keep it to rent it out to a tenant, and that tenant will be paying off the half of your property investment through paying the rent on an annual basis. A very popular thing that investors do is that they flip these properties on handover. How does that work? So you pay 50% during the construction period. Your property is now ready. Now you have an opportunity to sell that to somebody who has a business plan to rent out property, who only buys property that's ready so that they can place a tenant, they can mortgage it, and that tenant pays their investment and gives them some income. Now you are reselling this property after only paying half of its value at a higher rate than what you've bought it at. That is tremendous return on equity. Then you of course have different sorts of payment plans like a 60-40, 60% during construction, 40% on handover. You can choose to finance or pay that. Or you've got an 80-20, which most investors don't go for because it's quite heavy on the front end. You pay 80% of the principal value during construction and only 20% that's not really worth financing. Most buyers who purchase a 80-20 payment plan are either going to flip this property before even getting to the 80% paid off mark, or they are end users and they are going to move into this property themselves. If you purchase off-plan property with the intention to flip, you're doing this because the appreciation during construction period of a new project is much more than a ready property. You're going to start paying those payments until you get to about 40%. Then you're going to engage with a broker like myself to get that sold for you at a new rate, at a new market rate. So we're not going to sell that at the rate that you bought it for, considering that you've only paid 40% of that principal value. So should you sell it at the same principal value, you would still make a lot of money. But thank the Lord, this market moves on, it moves forward. Last year, we've seen a 16% appreciation across the board. In certain projects, we've seen over 20-25, and in luxury markets, we've seen more. This year is projected to have a 7% appreciation in general. With off-plan projects, that would probably be double. So we will resell that property at a higher value, and you've only paid 40% of that principal value. But that only works if you've bought the right type of product, which there will be a demand for. And the way that you differentiate if that will be the case is, again, going back to DXB Interact, looking at the past transactions and the developer's reputation of doing that for their investors. Where investors have done that with that developer before, that should give you a lot of peace of mind that you would be able to achieve that. Now, I don't say that purchase an 8 million dirham property even if you don't have access to 8 million dirham during the construction period. If you only have 4 million dirham, I promise you, you would sell this. We can't promise, but it's likely going to be the case that you can. But the people who benefit from real estate investments the most are those who keep properties until it's handed over or after it is handed over, because your appreciation and the value of that property skyrockets because there's such a big demand in the market and low supply for properties that are new and ready to move in. When it comes to investing in a project in a certain locations, there's certain boxes that need to be ticked, and these boxes I run through with all my investors to make sure that there is going to be a continuous demand into this location, to make sure that your objective at the year that it's going to hand over is going to be fulfilled. Let's take a location like Arjan, for example. Arjan has a huge tailwind behind it because it's less developed than JVC. And I'm using JVC, Jumeirah Village Circles, because it's right next to it. Jumeirah Village Circles is significantly more settled than Arjan, which means your average price per square foot has sort of leveled out, and there's still great transactions in terms of rentals and sales in this location. But earlier in the JVC life cycle, there was more opportunity. Now Arjan is right next to it, offering that new opportunity right in the beginning. So we're looking at this location and saying, why should I invest here? Why are people going to continue moving here? And will I have a tenant in 2027? Will somebody be able to buy this from me if my objective is to flip this property before handover? And to answer these two questions, we have to look at a few things as infrastructure. Arjan, for example, already has a Parkview Mediclinic. There's like 3 schools. The rental rates, 7% already. The reasons people would move here and buy that again from you is because of its accessibility to major roads, hospitals, malls, schools that are in abundance in Arjan. So we need to tick all of those boxes. I just ran through them briefly, but when we sit and we look at a potential investment, do we have this? Do we have this? Do we have this? Do we have this? What is the future prospect? Because in Arjan and JVC, in 2030, there will be a metro station, which is a tremendous advantage for an investor who wants to hold on to property or to flip property, because the reason you would be able to flip it is because an end user or an investor whose business plan is to rent out is going to benefit from buying that property from you. So there's a few boxes that we need to tick to make sure that the objective that you have will be the reality when this project is done. So the benefits and advantages of buying from a developer, buying a property that's under construction that will be ready, we've mentioned all of those, but I'm pretty sure that you still have many questions, because your use case and my clients who've invested with me in Arjan, JVC, Business Bay, their objectives are similar but different. Their expectations are different. Their experiences are different. Each and every one of us approach these type of real estate investments in a different light and understanding. So there's a link in the description to book a 30-minute call with me so that we can run through the investment strategies of my clients and to show you how you could benefit from following the same trends, and also answer all of the questions and concerns that you have before you make your first or second or third investment with exciting new projects and locations that I'm quite excited about getting my clients involved in. So I'll be happy to talk to you about all of those on our one-on-one call. Thanks for watching this video. Really appreciate it. You didn't have to, but you did. Thumbs up for that. Like, subscribe, share this with someone, and I'll see you on the next video.